Good morning, guys. Welcome to this Tuesday, September 23rd. And yesterday's rally was nothing but spectacular. That took me by surprise for sure. And we were expecting, we were starting from the long side of the market, but it kind of turned into a pretty good rally day. And we made new highs and we extended and we are back and we're still in that extension to the upside here. We had that little holding day here. Well, not even a holding day. We had since the gap up, we had a little, they stalled for a little bit, and then they 1, 2, 3 days of extending to the upside. So we are still very much in the move out of the middle to the upside and moving higher. News today, this morning, 8:30 we get the current account read. Not going to do much. 9:45 we get the PMI composite. 10 o'clock we get Richmond Fed manufacturing. So PMI, Richmond Fed manufacturing, that's pretty much it. We do have a speaker, Powell, speaking at 12:30 p.m. today. Not to be ignored. That could potentially move the market. That's scheduled for 12:35 p.m. today. So that's going to be interesting to see if he's going to say something which potentially could derail the market or maybe even enforce what's going on right now. We will find out. So that's where we are when it comes to news. So starting off from the long side of the market, no reason to do anything else. We still have this big fight about the government shutdown, which I happen to think is probably the most obvious risk to potentially this rally right now. If that starts kicking in, they can't figure out what to do, and markets start losing confidence that in what that a solution is going to be presented. That could potentially get the markets a little bit in a twist. Right now, it doesn't look like it. Market is shrugging it off, trading higher, and that's driven by the AI trade, quantum computing, that whole area. So that trade is very much well and alive. So that is your the Nvidias, the Palantirs of the world. Those are the part of the AI trade. Um, so starting off on the long side of the market, looking to buy weakness at this point against the 67.45s. I told about the single prints here, the yesterday 67.40s. And I would be looking at those for potential buying opportunities. These two single print Gs here on the F2. I didn't put the ledge there, level there, gets a little bit too crowded to try to do it, but those two single prints could potentially be an opportunity. Then you have the 6730s, you have the 20s down to the 6700s. Now I would think if they take out that 6720s, I would take off the long bias and go back more range bound. That feels very much like the breakout area. So remember this little pop we had the other day? And it broke out of that 6720 area, 15 to 20. They held it, and then we got that nice rally yesterday. So I would say this is a Friday trading, and so I would say that if they trade below that 67.20, 15 to 20 area, I would take off the long bias, go back more range bound, and we're back down in this lower range. So, but at this point, I would start by looking for buying opportunities against that 67.45s, against those single prints, against the 67.30s, against the 67.15 to 20s. So that's how we get started this morning. Nothing really to get short against on the way up. 67.55 was the high. That's the only thing they have in front of us. And I would not be very aggressive on it. I would just leave that and let the market show me when there is a potential short scalp opportunity setting up. But as you saw yesterday, if you try to get short on the way up yesterday, you would have been run over every single time. So you do have to trade that with a lot of caution. We are in the move out of the middle, so one of our rules: do not fade and move out of the middle, and that's we're going to abide by that. We're not going to try to get short against it. Doesn't mean that they may not be intraday short opportunities, but it's nothing we're going to be aggressively trading by any means. If they back off Is to start taking out that 67.45s. Um, Again, buying opportunities potentially against those two single prints, the 67.30s and the 15 to 20s rotation up. Below 20s, take off the long bias, go back range bound. Still looking to buy against support if they're going to back off, but just not as aggressively anymore at that point. Just looking for these support areas as potential buying opportunities. And I would say if they for some reason turns into one of those days where they start taking out some key support, when they start taking out this area, the 6670s, that would be almost a 100-point move to the downside. We have a pretty good move. Then we have a really big problem on our hands. But at this point, I'm just looking at that 67.50 to 20 as the taking off the long bias. And at that point, it would be right back into that 6700 level. If they start taking out that volume edge at the 6690s, at that point, you potentially could be more aggressive on the short side at that point. At that point, see how far they want to take it. But at this point, right now, I would say trade it from the long side of the market. No reason to do anything else. We'll see how far the market pulls back. Potential or take off the long bias at that 20 level. When you want to shift the bias, if the move turns into one of those elevator down days, that's when you kind of have to search on judgment. I mean, we're already taking off that bias at the 67.20, so technically you can look for a short right at there at when that 67.15 comes out and see how far they can take it. But again, always the key thing if you want to try a short if they pull below that 20s, is not to or pay attention to this F2 so you don't sell into the support area. That would be the bigger mistake. So you did run it lower right into support area, you sell right into it, you find yourself immediately caught in a shitty trade. So if you can avoid that, at least you have a shot at hopping on a short trade there and see how far they can take it. So that's how we get started on the ES from the long side of the market, looking to buy weakness. Watch that 67.15 to 20 area for changing our bias for today. Looking at the bonds and the Nasdaq bond market, looks like 116 is holding. They're backing off a little bit. They're trading up just a tad. We'll see that turns into something, but not going to get my hopes up just yet. I'm waiting for them to take out that 1624, maybe even the 17 here before I start getting excited about this long side again. So right now I'm looking still for shorts against this 1616, 1624 up to that 1630 to 117s for rotations down again. If they start taking out the 17s, I'm going to be looking for a retracement trade up to this 118 level. So that would be the level I shift my bias on in a bigger way. In other words, you see that 117, that big ledge right there on the F1 that comes out. That's when you really then you know you're back up here again. Right now they're building value right below it, and they can certainly stick around here for a while, build value. That fold this stuff together, you start seeing a nice distribution, and here you have a pretty obvious edge at the 116, 6 to 10 level. All right, so that's kind of how we get started. So that's the bond. On the way down, they're going to buy against the 116.10, 116.6, 116 even for rotations up. Could be a nice retest failure still in the works. So if they start running this lower, unless they can take out that 116, we're definitely in a spot where we can see a nice retest failure setting up on the bonds. So that's kind of the bond market right now. I'm starting off range bound right now, looking to see if they're going to try to take it higher or retest that low. If they retest 116, looking for that retest failure setup. And if 116 comes out, then we are heading lower. The bets are off. We're heading lower at that point. On the Nasdaq, also nice move to the upside yesterday. Spectacular pop up to the 25,000 on the Nasdaq. Go figure, right? So after this gap up rolling into the December contracts, we've been pretty much seeing a pretty straight shot to the upside. One little pause day, and then it's pretty much been extending ever since. we're gonna get the elevator down there at one point, just so you know. It's not gonna be like a straight shot up like this. Find it, and it doesn't need to even be an event causing it. It could very well be just uh, if the market starts, you have some institutions start taking profit, it piggybacks, the whole thing starts becoming a risk off kind of a day. Right now, we're still leaning towards the long side, looking to buy weakness. And if I look at, scroll this guy up just a little bit. And so looking to buy against support 970 against the 930s, 880s. Below 880s, I will take off the long bias, going back range bound. Maybe give it one level below the obvious at that 820 before you do that. So between these two support areas, but definitely below 820, you should take off the long bias and go back range bound. At that point, they're back in that lower range around this little volume node at the 750s. And if they keep going below that, just hop on the short side because then something is up. So that would be on the Nasdaq, it's a little bit better behaved than the ES in this case. So we have a nice volume node right there. So they start taking out the lower end of that, the 700s. I would be looking at a little bit bigger move to the downside at that point. That would be a pretty good retracement happening at that point. So starting off on the long side, looking to buy against support, 970s, 930s, 880s, maybe down to the 820s, depending on how aggressive you want to be. But below the 820s for sure, you need to take off the long bias and go back range bound. Below a 700s, hop on the short side and see how far they can take it. That's the way I would do it. All right, so that is your Nasdaq to get started. So both ES and Nasdaq starting from the long side, no reason not to. On the way up, not going to be very aggressive on the short side. I need an ES and a Nasdaq. So I'm going to watch it to see if we get the consolidation day today, or if they're going to be more to be had on the upside. Sometimes you get the move like you had yesterday. You get a consolidation day the day after, but it doesn't need to be that way. Market is going to do what it's going to do. Gold is just spectacularly melting up. And pardon the pun, but man, look at that thing heading higher. What are you going to do with that? So they popped yesterday, and overnight it went back and forth, holding for a bit. London session kicks in, and straight up it goes. So that is pretty crazy. So stay on the long side of gold. The F1 is kind of useless at that point. Look to buy weakness, 3810s, 3790s, 3780s, down to that 3770s. Now, if it starts trading below that London low at the 3780s, take off the long bias. But it could be a nice retracement trade here. I mean, if they take out that 3810s, retracing all these single print to retest the 3790s, that is a very obvious trade in front of you. It can happen pretty quick too. So I would watch for that one in the day session and see if that's going to turn into something. But I would just still look for buying opportunities against these lower support areas. But stay on the long side on gold. Primarily, it is massively volatile, so you have to trade that with a lot of caution. I have not traded it. Sometimes it's tempting, but it swings back and forth, and the follow through is just shitty. So I mean, if I go back a little, you see this move. This is that move. You see that once it kicked in on the move higher. Now you see a few of these bars, they had a little bit more to lean against to hop on a long trade. And that would be like, yeah, you're gonna have to just freaking buy the high almost to get on that thing. But these are big bars too. These little bars in 97 up to it's like 30, 40 tick each bar here. So it's pretty big and it moves, it keeps moving. So but that's I mean the only way to get in on that, but you never know when the run stops. So yes, so when you decide that you want to hop on that long side, it may be towards the end on the move. So it is notoriously difficult to trade that stuff. But if you get on it and manage to stick with it, you'll be a happy guy. Right now, though, we kind of ran out of gas around about that 3800s, and let's see if they can hold on to this or not. But that retracement trade could be a nice one to pay attention to. And then finally, oil. back to value again. So there we have it. So they're trying to hit probing down here. We never got a really good retest of that low here at the 6150s. They right now they're heading right back up to resistance or to value. So I would just stay range bound on oil. Maybe look for early strength to see how far they want to take it on the upside. But initially, I would look to buy against the 6230s, 6180s for rotations back up again. Maybe down to that 6160s as well. But still looking to buy against these support areas right now for rotations back up again. If we get it, I think that trade may be over. We may be seeing this one keep going higher here, back to value to the 6320s, maybe even out to the 64 here. So I would look for early strength on oil and see how far they can take it on the upside. So this is just oil retesting the edges, right? So it is range bound. That's how we have been trading it, and we've been paying attention to that lower edge. But you see, they ran it lower. They ran it lower, and then testing lower edge, then they're heading right back up again. So values around about 6330 to 64. So that's around where you have the value area on oil. All right, so that's oil. Starting off range bound, looking for early strength. Gold, stay on the long side. Look for that potential retracement trade if they decide to try to knock it down. But ES and Nasdaq, both of them holding on to their highs, and we're starting from the long side there and see how far they can take it. So already, we'll wrap it there for now, guys. So good trading, and then let's see how this whole thing shakes out. And I'll see you back at 11:30 for the next updates. Good trading, guys.